What is up, you guys? Thank you so much for stopping by once again. Happy Monday. Tonight we're going to be talking about AVCT. But before we do so, make sure to hit the subscribe and the like button so that we can get this information to as many people out there who want to learn about the trade. Without any further ado, let's go ahead and begin. Okay, so yesterday we were talking about the fully expanded phase of our BBWP indicator. What we're looking at here is actually volatility represented by BBWP. Our contraction phase has begun, and we're moving towards the downside, indicating that volatility is starting to disperse. So yesterday we called that we started seeing our momentum oscillator facing towards the upside, and that an impulsive move was likely on its way. So we actually did get that. The asset moved impulsively all the way up to, what is it? What's our high here? $2.35 before barely retracing to $2.24. Now, we are looking at the daily chart here, and we are looking at stochastics momentum. Our momentum oscillator is still, what I'm saying is that it's still suggesting upside here, and it has barely begun from 2.46% oversold. That's a critical low. Just out of curiosity, let's just go ahead and see how many times we've touched that in the past. Let's draw a horizontal line, and it looks like we've reversed once, potentially twice, 3, 4, 5 times in the history of AVCT, and we're talking about from August 2017 till today. So this is likely to bring in some nice juice. Okay, let me go ahead and take a look at our notes here and see what we got next. Let's see, the contraction phase has begun. We did talk about that. All right, perfect. Now, our momentum oscillator, just so that you guys know, I have backtested this in a few tickers before, and the momentum oscillator has about a 93% hit rate overall. So meaning that it does guess the direction of the asset overall 93% of the time. So this is highly likely that we are going to face an upside continuation, seeing that our contraction phase has barely begun here as well. Okay, let's go ahead and move on to the next chart right here. So we got to see the 8-hour chart next, and here it is. Okay, we have a couple things to look out for here. We have a let me close out the SMA so that we can make this clear. We have a gap. And actually the gap would technically be up to here. We have a gap to be filled, and the 385 level is going to be edited right now as well. So we're looking at about not 320, that's going to be 340 to, wow, so that's 340 to 404. Let's go ahead and make this here so that you guys can be able to have some notes. To 404. We don't actually have to fill these gaps. We never actually do. The thing is that they present a psychological component to the trade, which makes it something that people just want to make sure that we can fill. But usually when we start looking at upside, this is an 8-hour chart, so every candle here is 8 hours long. The thing is that when we have a gap like this, we'll usually find resistance here. So this looks like we can trade upward for the next couple days. I mean, obviously we'll see some type of retracement first before we continue our ascension, and eventually find resistance right at the gap and also at the resistance level of our descending channel. Which has some confluence right here, which is something that we should definitely watch out for. Okay, let's pull up the simple moving averages now. I wanted to show you something with that. Okay. we can with price action going up after possibly a small temporary pullback, we can actually pressure our moving averages towards the upside, which would then land these the 200-day moving average and the 50-day moving average at a very similar range between our gap. So that's another thing that we have to look out for, because this 200-day moving average is already within the gap range. So we have some rhyming within resistance levels here. What I'm just trying to say with that is that it's more than likely going to be used as resistance for us to pull back. And also, since it is the 200-day moving average that happens to land potentially at the gap top to be entirely filled, and also since we have the descending channel resistance, and also the beginning of the gap, and potentially the 50 and the 100-day moving averages, this can technically be a bull trap situation for people who think that we are overly bullish. Now, it's a little difficult for me to be able to just gauge the direction right off the bat, and I'll tell you why. This type of price action here, this gives us, again, a psychological component. People are looking at bull flag, and then bull flag, and then bull flag, and you're just going to trigger FOMO, the fear of missing out. So now triggering FOMO, which was already partially presented here, it invalidates traders like me, because then I don't have a metric to be able, or some type of indicator to be able to measure psychology. When we do, like, please let me know, because I would love to experiment with that. But as of now, we don't have any metric to measure psychology. So FOMO events are just beyond technicals, beyond fundamentals, beyond anything that anyone can do. It's just brain power and mass sentiment driven. So this could potentially present a bull trap for those who get a little overly bullish on the asset. So I do have to have you guys watch out in this area here. I would say starting from 296 to about 404, this area here can present some serious dangers for day traders and for long hold positions as well. All right, let's go ahead and move on with price direction. I want to take a look at some RSIs and different time intervals so that we can be able to gauge our direction for the trade. Right off the bat, the 30-minute RSI is coming down from an 83% overbought. It's not bad. It could have still gone higher, but it did. People usually at these levels want to take a breather. We did make a bearish cross, and now we're trading below the moving average. And it appears as though we're failing the bullish strength percentile. So again, you guys, I do have to explain this every single time, because there's always new viewers and new people here. So we have an RSI here. This is the RSI indicator as a basic indicator. It is split in two. This is I was a developer for this ARC RSI, ARC being ARCa, me. So what I ended up doing is just putting a bullish control zone percentile and a bearish control zone. So now we have it split in between two places. We have the entire bullish control zone right up here, and this is the entire bearish control zone down here. Now the bearish control zone and bullish control zone are split in two. We have bear strength and bear weakness within this area. Then we have bull weakness and bull strength. So just in case you hear me talk about that, you'll know what I'm talking about. So it looks like we're primed for failing the bull strength percentile here and entering bull weakness. Let's look at a shorter time frame just to see. I'm a little curious as to the 15-minute. Okay, so the 15-minute definitely failed the bull strength. We're in the very shallow areas of the bull weakness percentile, and this is primed to enter bear weakness. And this is the remember the entire bearish control zone down here. Okay, let's move on to a larger time frame. This is the bi-hourly RSI, and it is about to fail the bull strength percentile. We have the moving average coming up towards it, which means that we're probably about to, if we don't use it as support, we can actually fail that and create a bearish cross. Sorry. Let's look at the 4-hour within the same pane. Okay, it's very similar to the bi-hourly. Downside pivot suggesting some downside. And let's look at the 6-hour RSI. 6-hour RSI is in the shallow areas of the bullish control zone. I would not hold so much weight into this. This is potentially going to come back down into bear weakness. And the moving average may actually meet us here so that we can start going, making our descent into bear strength. Let's look at the 8-hour within that pane. Same situation. Okay, this is the 12-hour RSI. It does have a downside pivot. However, the pivot is not so strong. It's not nosediving here. It is a little unbiased in its direction suggestion. So I don't see so much sell pressure coming in that's gonna send us down to zero. But I do see some pressure coming down that can potentially have us go and retest some relevant supports. And I think that just by looking at the price, just by looking at price action from the other charts, I'm thinking maybe between $1.89 and $2.05. So sorry you guys if that's my little that's my toddler right outside. He hears me talking in here. He wants to come into the studio, but mom's taking care of him right now. Okay, so let's go back into let's see. I want to go back into the edit 2 page and look at those targets real fast. Let's see. Okay, we're going to draw a fib for the range high and range low. Okay, let's see. Okay, so I was looking earlier and I said about 189 to 205. Now, our fib is suggesting possibly 185 to 207, so it's pretty close to what I just guessed by eyeballing it. The 207 lands. Let me just draw a trend line here so that you can see how relevant that 207 is. This 207, wow, we could barely see that thing. Let's just make it yellow real fast. You can see that we're touching right there. We're touching right here. Now, there's probably not going to be anything historically too much because we're at critical low levels right now. But this is a pretty strong support. We're looking at support not only from these previously used support areas, but also because it is the 786 fib ratio. Now the 185 is a strong support, not because we've used it before within just these two areas here, but it's because it's the inverse golden pocket, or the golden ratio. The zero spot, the not 618 is usually somewhere where people tend to use as a support or resistance, just like our 1 spot 618, 2 spot 618, and our 3 and 4 618s. Yeah, so I would think that the lowest we can see this go would potentially be the 382 at 154. And it actually may not wick all the way down to here. It actually may recover right at about $1.62. And the reason why I say that is because the SMA 10 is right within this level here. So if we start descending, this can possibly descend. I'm sorry, the SMA 10 could also possibly descend right into the 154 level or slightly above it. So I just want to make sure that you guys know that we do have some downside coming up before we can continue making our way back up. But anyway, you guys, that's going to do it for today on AVCT. If you guys have any questions or any concerns, please comment below. Reach out to me at ARCa Bulls, ARCA on Twitter. And I also leave the link to the Discord down below. But yeah, you guys, thank you so much. Happy Monday to you all, and I'll catch you at the bell. Adios.